Hello everyone, thanks for tuning into this video. It's called Seeing the Big Picture. Okay, now I'm sure you would all agree that you can only see as far as the eye can take you. Here's the scenario. You're in a car, okay, and you're driving on a mountain road. You see a warning sign ahead of you, but what do you really see? Again, you can only see what's ahead of you, which is limited to the curve ahead of you. You don't know what dangers lie past the curve. Perhaps there's a stalled truck or a large animal crossing the road or a serious vehicle accident, all which you won't be able to see in time and keep you from being safe. Okay, now take a look at this picture. See how your view is instantly improved? The road is clear and there's no imminent danger ahead. You can now relax. So by zooming out, okay, and having a wider view, you can see quite further ahead of you, and you can see on the curve here or after the curve, okay, that there is no imminent danger, there's no accidents on the road, and you can proceed safely, okay? Now, what does this have to do with trading? Well, one of the biggest problems with most traders is not seeing what's around the curve. It's not seeing the markets clearly. In other words, what the market is doing and telling you right now. You're not seeing the big picture. In this video, I'll show you how you can instantly improve your trading if you do this one important thing. I'll cover this in the mini lesson, and as always, I'll review this past week's free trade signals. Okay, before we get to the actual signals, we're going to look at the charts and we're going to look at the entries, the stop losses, the take profit levels. We're going to find out what happened this past week. Before we do that, here's my humble disclaimer, guys. My free signal service is an educational program only. I'm trying to teach you how to trade correctly and not give you any specific investment advice. It's your responsibility to evaluate the relevance of my advice and content. Don't blame me if you lose all your money. You probably weren't paying attention to what I'm teaching you, and you're not following my instructions. Now, since we're trading with real money, only risk a maximum of 1% of your account balance, and for new traders, trade on a demo account only. Let's jump to last week's trade activity. We're talking about the week from July the 19th to the 23rd, okay? And there are 3 trades over the week. Not a lot of activity, and we didn't have any really big winners, but we didn't have any losers as well. So that's good news. So on July the 19th, you can see right here on July 19th, I sent out a free trade signal. It was sell the New Zealand Swiss franc, and it was a winner. Not a huge winner for approximately 32 pips. It did reach the first take profit. Okay, so still a winner, guys. And remember one important thing, especially those people that are newbies or trading forex for the first time, and you're not really aware. It doesn't matter about the number of pips that you can win or lose, but what the amount of volume or the amount of volume what you can buy based on your account balance. Okay, so when you open a trade, just because there's a few pips and the volatility on the currency pair is lower, this means that you are able to increase your lot size. Okay, so just keep that in mind, okay? And of course, when there's huge volatility and there's a possibility of gaining, let's say, 100 pips or more on a currency pair, then that means your lot size will decrease automatically because of the way our risk is set up. And we use a special indicator called the position size indicator, okay, to help us manage our risk. Okay, so the next day, July 20th, I sent out a signal here buy the USD Swiss franc. It's right now in profit. Keep it open. So keep it open, and we'll see what happens on the first trading day of this week, which is Sunday and Monday, and I expect price to go higher. And then on July the 22nd, I sent out another free trade signal, sell Euro USD. Again, right now, keep this trade open. And I believe that there's just a small loss on this right now. So keep this trade open. We're going to look at all three trades in just a moment. We're going to actually look at the charts. Okay, so for this past week, so far, we have won approximately 32 pips with more to come, especially on this one right here, the buy USD Swiss franc. Okay, so 32 pips won. We didn't lose anything, guys. And that's still pretty good in my books. Okay, so let's get going to the very first chart. And that's the sell New Zealand Swiss franc. Okay, so let's take a good close look. First of all, you can see on my left side, this is the data information I sent out. So when I do send you the free trade signal, I always give you the information, the sell. In this case, it was the sell trade. Here's the entry, 0.63, 63.68. The stop loss is 0.6456. The first take profit, second take profit. I give you those levels. So you input that information on your MT4 trading platform, guys, when you open up the trade. So let's take a look again. Here was the sell signal right there. Okay. And we took a sell trade. Here's the entry, right? Sell entry at the close of this black candle, okay, or the open of the next one. And guys, we always wait till after 5 p.m. Eastern Standard Time for candle to close, okay? Eastern Standard Time, New York time zone, okay, or Toronto time zone for those people that love to hear me talk about Toronto, right? It's not all about New York City all the time, but you know, I am broadcasting from the Toronto area. So anyways, here is the entry. Here is the first take profit target. Okay. And you can see on the next day, the price did actually go right down and did hit our first take profit. Never did hit our second take profit, but and then is now reversed. So still a winner, guys, for this very first pair. So congrats if you took the trade. I don't know why you wouldn't take my trade signals. I've got a really good winning track record, guys. So anyways, that was the first win of the week. Okay, so let's get going. Okay, guys, on July the 20th, I sent out another free trade signal, and it was to buy USD Swiss franc. Okay, so let's take a look, guys. Here is the trade signal right there after this bigger momentum candle. Okay, you can see the price closed right there. So our entry here on the information I sent out to you, the entry was 0.9213 right there, guys. Okay, I did give you the first take profit, the second take profit levels. You can see them in green here. Here's the first take profit level, second take profit level. And guys, I don't I don't talk enough about the stop loss. It is always on the information I send you here, 0.9140, guys. There is our stop loss. Okay. And let me just right there. I'll put the arrow there so you can see there's our stop loss that we enter when we open a trade, and we always enter one position with our first take profit level right there. So after this candle closed right there, the next day it went down, and I issued you a email alert basically saying for you to keep this trade open, guys. This candle did not cross below this green line. You can see this line. It's the DTL line, and I keep repeating, it's the 21 EMA, exponential moving average, 21 EMA. Okay, so this candle did not close or did not cross and close below the line. So you keep the trade open, guys. The next day, price reversed the gain as I thought it would. Okay, it's closed right there. And the next day went all the way up past our entry, but it's still come back down. And I still believe this week price is going to keep going higher and hopefully hit our first take profit level. So keep the trade open. That's the word on this one. Okay, and let's get going to our third and final trade of the week. Okay, that is sell Euro USD. I sent out the free trade signal on July the 22nd, guys. Here's the information I sent out so you can see that. It's all there in front of you. All you have to do is follow my information, follow the instructions, and take the trade. Okay, so you can see it's a sell entry for the Euro USD. Here's the entry 1.1770. Here's the stop loss, the first take profit target, second take profits target. So you don't have to think, you just have to follow my instructions, guys. And the entry, here's the signal right there, and the entry was after this candle, and there is room for price to go lower up to at least this level right here. I bought it in the gray line. Okay, so price basically, there was a bit of a doji candle, so kind of a nothing day on the last trading day. Very low volume. Price didn't really move much, and we're basically at break even right now. So keep the trade open. Let's see what happens at the beginning of this week. I'm hoping for one or two more good candles down, and then possibly price will reverse higher. So again, the information on this trade is keep it open. Okay, and let's see what happens. The results of this week was okay. I mean, we got to be happy whenever we make pips. Okay, we don't lose money, and that's great. We have, I don't think we've had any losing weeks, perhaps one, but I would have to go back and look at my notes. So again, it was basically a nothing week, very quiet. Okay, we didn't have any big, huge news announcements to move price in any one direction or another. So we'll look forward to next week, and hopefully we, we are now. Bear in mind, guys, we are in the middle of summer, and trading volume is generally very low. Okay, during the summer months, so we're trying to cope with that. The markets aren't that great, anyways. There's no really sustained trend direction in one way or another for most of the currency pairs. The idea is that most of you guys are still learning and learning to have patience, right? If anything, patience is the number one key to your trading success. Now, let's move right away to the mini lesson. And we're going to talk about the big picture, because most of you traders, when you're looking at your charts, you actually miss seeing the big picture. And first of all, before I tell you exactly what it is and how we use the big picture to our advantage, I want to tell you the big picture eliminates three big problems. Okay, now number one, chances are that your trading decision in the moment, that means right now, is completely wrong. You can better anticipate trades when you can see what market phase you're in right now and how it compares to the overall market. Okay, so we are, when you look at the charts right now, when you regardless of what time frame you're on, you're looking at the charts and you see something, but it's not necessarily what's happening to the overall market. And now it's always safer to trade in the direction of the overall trend in the larger time frame. Okay, so there's your first big clue as to what the big picture is. Okay, it's the larger time frame. Two, most traders pick their one time frame for trading, then almost never leave it. They're so locked into their time frame that they forget about the bigger picture. Now, how many of you, whenever you're trading, and again, hopefully not too many taking the free trade signals, or the people who subscribe to this program, because you know what time frame you're trading on, but perhaps some of the newer subscribers or the people that are still trying to do it their own way, think about it. You probably locked in, or you're probably in love with your one time frame, whether it be, let's say, the 50-minute charts, the 5-minute charts, the hourly charts, or whatever, right? But and you don't change. And obviously, when you're locked into these lower time frames, you do not see the bigger picture, and that's why you're making all the mistakes, and that's why you're not successful. So the people subscribe to my program, the free trade signals, we are locked in. We love trading the daily charts. Okay, number three, most traders also constantly jump from time frame to time frame without much of a plan. Now, those traders are mostly driven by emotions and trade impulsively, right? Okay, so you know who you are. you know who I'm talking about. So you're on the 5-minute charts, and then you're looking at the 50-minute charts, looking for trading opportunity there. Then you go switch back to the 5-minute charts. You're looking for trading opportunity there. Then you see price going in one direction. You switch to a minute chart, and you take a trade because you're very impulsive, guys. You are trading on emotions. You're hoping for the quick buck, guys, or you're trying to regain back some money that you just lost recently. You're losing money and you want to make money back. You're revenge trading, right? That's a really good word to use for those type of people. So anyways, those are the 3 big mistakes that happen over and over again. And the big picture eliminates all of this, okay? Now, what the big picture tells you, and this is why it's so important to understand what the big picture is and how it can help you. First of all, it tells you and gives you the overall trend, the overall market trend. So it's important. We want to trade in the direction of the overall trend. It gives you the overall momentum, okay? So when momentum is increasing, we want to enter trades. Overall direction, okay? This is really important. So direction and trend go hand in hand, okay? You want to be trading bullish or bearish in the direction of the trend, okay? Available space for profit movement. Now, what does this mean? Well, when you open a trade, the big picture will tell you if there's enough room for price to move higher or lower, okay? And when I say enough space, we generally want to look back and see where the resistance and support zones are. So if you do enter a trade, is there enough room, let's say if you take a buy trade, enough room to go higher to the kind of the next major resistance area? And only the big picture can tell you that, okay? Most likely your current charts won't be giving you that information. Pending roadblocks for trading failures. Again, you want to see if you want to see once you enter a trade, if price can still, like I said, go further in your direction, and if there are any problems ahead that you see, or any problems in price action over the last little while that possibly could prevent price from going in your direction, right? So the big picture can tell you all of this, okay? And let's take a look here, and this is the really important screen. How do you see the big picture? Well, first of all, you're going to start with your entry chart. Now, the entry chart is the chart that you use predominantly for your trading decisions. So whenever you enter a trade. And guys, anyone subscribe to our program, we all know that we're trading on the daily charts. So the daily charts are our entry chart. Okay, so that's our entry chart. We're using the daily time frame. Now, if you're using, let's say, 15-minute charts, or 5-minute charts for your main entry decisions, then that would be your entry chart. But I would not advocate that. I would not support that, because that's why you don't see the big picture, and that's why you're going to make a lot of mistakes. Now, what you do next is you change to the next higher time frame. Okay, so the next higher time frame on the MT4 trading platform that we're using, the next higher time frame to our daily charts is the weekly chart, okay? So this chart is called the big picture chart. So in our trading world, okay, of the free trade signals, we use the weekly charts. It's called the big picture chart, and that helps us determine what to do and confirm our trading decisions on the next lower time frame, which is the daily time frame. So again, for you new traders or traders trying to do your own thing, if you're trading on the 15-minute chart, then basically the next trading chart, I would probably go not use the half hour, but go right up to the hourly trading chart, right? That would be your big picture chart, or the daily chart, okay? If you're trading on lower time frames and you're trying to scalp the market. Okay, so that's we've got that out of the way. Now we've defined what the big picture chart is. Let's take a look, guys, and look at what I mean. Okay, so when it comes to the US CAD, guys, you can open up your charts and take a look. But here you can see, okay, you can see price going higher, okay, and made a new high here, okay, after a downtrend. So we have a reversal in price action right there, reversal, you can see that, okay, and price started going up and then came back down, which is good, healthy retracement, okay, because we now want to trade again in the direction of the overall trend. And you can see price then went right up with the next three candles, and it's come down a bit here, and we'll see price comes down a bit and then continues going higher. Okay, so this is the US CAD, guys. This is what the big picture tells us. This is the weekly chart. Okay, this is the weekly chart. I'm going to show you the daily chart in a second, but on the weekly chart, it's represented by this line. You can see right here. So here, price is above this green line, okay? Price is making higher highs. So here's a higher high over the previous high. Here's a new higher high here and a higher low over the previous low, okay? So it's starting to go up higher overall. That's the price action. And when price comes down here, you see with this retracement candle, let me just take that off. So here is the retracement candle. Here's another retracement candle. But what you see within an overall uptrend, which is this green line, the retracements is here. And on lower time frames, guys, that's what you're going to see. So you're going to see candles generally going up and then coming back down, retracing, okay? But you kind of disregard this. And you kind of look at the overall trend. Is the overall trend still intact? This is the overall trend on the higher time frame. In our trading world, it's the weekly, guys. And when you go back down to a daily or lower time frames, you're going to see the retracements. Okay, so price goes up, and in a regular healthy uptrend, price is always going up, making a retracement. Going up, retracement, going up, continuing in the overall direction as the next higher time frame, okay? And on your charts, it looks like this, guys. Right here, you can see price going up. Here's the retracement. This is the retrace. Well, you can't see the retracement that much here because this is the higher time frame. But on the lower time frame, guys, you see this, then going up, down, and these are called cycle waves. So here's one cycle wave going up and down, another cycle wave going up and down, another cycle wave here has started with these two candles going up. We haven't had a retracement yet. So lower time frame, okay, guys, and in perspective, taking a look the higher time frame with the green line here. So higher time frame, and let's take a look, see what happens on a lower time frame. Okay, let me just erase that. And we go to this. Okay, so that same period right here in this higher time frame where we saw price going up and up. See this whole section in red here, okay, and the price going down, okay, so you can see price is going down, okay, it's going down, and it's going down, okay, and then slowly it's starting to reverse, okay. So this is on a lower time frame. This is what you would see. And again, if you're trading on a lower time frame, you're going to be making mistakes. You're thinking that price is weak, the USD is weak against the Canadian dollar, and price is going down. But guys, that's what you should not be doing unless you're trading on unless you're a scalper or intraday trading, okay, then that's what you would look for. But guys, if you're trading on the higher time frames like we do, we want to trade in the overall direction, okay, of the larger time frame, guys. And again, going back to this slide, that's right there. Okay, so there's the higher time frame. So when we see this, we want to look for buy trades as long as it also is confirmed by our trading algorithm. Okay, so that's what we're doing. So again, lower time frames, this is what you guys are doing. You're making mistakes for you newbies. And just as you, let's say, enter a trade, okay, just as you enter a trade, it goes down a bit, then all of a sudden you're surprised and price turns to go back again, reverses against you, and that's when you end up in a losing position. Okay, so hopefully this is really clear, guys. And this is what I mean by that big picture. Okay, now one more last thing: confusing smaller time frames. When in an overall trend on a larger time frame, you see price going up. This is a retracement because price can't go up forever, right? Regardless of the time frame you're on, price is always retracing. There is let me just see if this works. Price is retracing right there, guys, before continuing its trend up again. But when you get down to here, you're going to see this kind of pattern. So price is kind of like not doing anything, and a lot of traders get caught right here. They enter a sell trade, price goes down, goes up. You guys, then you become a little bit scared, wondering what's going on, and then price goes down again. And just as you starting to feel comfortable again, price now reverses again, and either you're stopped out or you're in a losing position. But that's what happens after a retracement on the long time frame. Price will retrace as it always does, then continues going higher in the overall direction. And a lot of you guys get confused by this kind of pattern or any kind of sideways pattern, okay, before price continues to go higher in the same overall direction as the higher time frame. So this is the lower time frame, guys. That's where you're making your mistakes. And this is the big picture. The big picture will show you that there is a retracement, but not to worry, and price continues going higher. Okay, so hopefully that explains quite a bit of stuff as well. And let's continue with one more thing. There's a checklist you can take before taking a trade. Okay, so first of all, define your higher time frame chart. Now with us, our higher time frame is the weekly chart. Okay, so in your case, which time frame is it? This is known as your big picture chart. Next, switch your chart to the higher time frame. In our case, again, it's the weekly, and take a look at the bigger picture. You want to see if price can move. You want to see if your entry and direction is the correct decision to make. Okay, and you can do this by seeing price on the higher time frame. Use this chart to see. Also, you can use this chart to see price reversals, right? So on a higher time frame, you can definitely see price come down and then go up. Your reversal would be here when it starts making higher highs and higher lows. Okay, you won't be able to see that right away on the lower time frame. So this is what the big picture can help you see. Reversals, also the overall direction and price strength with large momentum candles. Okay, and again, we want to see price above the green line in an uptrend and below the red line in a downtrend. Okay, and sometimes we get to see large momentum candles, which confirms the direction. Also, look back to your left and see the support and resistance zones to determine open space to see if price has room to move or not, which could indicate pending danger. Now, I do this all the time. What's actually one of the first things I do when I switch to the weekly, I actually look at the resistance and support zones before entering a trade, and does price have room to move, right? So the big picture helps you do all this. Next, define your entry chart. Okay, your entry chart is basically one time frame lower, or if you're intraday or trading during the scalping, then it could be several time frames below that. So you take trades on this chart in the same direction as the big picture chart. So again, in our case, and the subscribers to our program, our entry chart is the chart we take entries on, which is the daily chart. Okay, the daily chart, our big picture chart, is the weekly. Now, the other thing you can do is zoom out of the daily chart a little bit more to see more candles at the left side to give you a big picture on your entry chart. Okay, and I do this a lot too. I want to see what's happening on the left as well. I'll maybe open up a chart, the US CAD again, and I'll show you what I mean. Look for the overall price patterns and momentum. You can do this. You look for larger momentum candles on the daily chart. Look for trending patterns. That means higher highs, higher lows, lower highs, lower lows for a downtrend. Okay, higher highs, higher lows for an uptrend, and lower highs and lower lows for a downtrend. And then finally, again, just to repeat, always trade in the same direction as the big picture trend. So if the big picture shows you that trend is going up, okay, then you want to trade up. You want to take a bullish trade entry on your daily chart. If the big picture shows you that price is going coming down and price is below the red line on the big picture chart, then on the daily chart, when you switch to that, you want to take a sell trade only, okay, which makes sense because you want to trade in the same direction as the higher time frame chart, or the higher time frame chart known as the big picture chart. Okay, so hopefully that that clears that up. And I do want to do one more last thing, which is again show you something important. Okay, and this is the time frames. It's not silly if you're thinking, where do I find the time frame, guys? But let's take a look. Above your chart right here, you can see these are the time frames, okay? Right there, okay? And you can see that the lowest time frame you can trade on is the M1, that's the minute, 1 minute, M5, that's the 5 minute, 15 minute, 30 minute, 1 hour charts, the 4 hour charts. H4 is the 4 hour, the daily charts, weekly charts, and monthly charts. So for us guys in our program, we're trading and taking the trades on the daily chart right there. And we use the weekly chart. We use the weekly chart as our big picture chart to see if we're making the right decision on the lower time frame. Okay. Now I do want to just look at the chart. I want to open up the US CAD just for one more thing, because I want to zoom out, and I talked about you can also zoom out to see the bigger picture on your entry chart. Okay, so let's do that. Okay, guys, over the past few weeks, I've given you 2 trade signals which turned out to be phenomenal winners. This is the US CAD daily, okay, and you can see I've zoomed in to make these candles look very large, but in the past I've given you right here the 2 trade signals right here, and price went up. This was a good winner. I'm sorry, the entry was right there, okay, and let me just take that off. Okay, the entry was there, and then we price went up here, and then we were stopped out after this candle, right? So the US CAD has been a very good, you can see a good trend, uptrending pattern here, making a higher high, okay, higher low, right, higher low, again, higher high, higher low, higher high, higher low. Okay, so you can see this is the definition, the basic definition of a uptrending pattern when it does that. But what I want to show you is, let's zoom out to see the bigger picture as well. Okay, let me take that off. And to do that, you can see above the chart on the menu here is the plus and minus sign. So to zoom out, I'm just going to click on the minus, okay, and you can see right there I'm doing that. And now I've drawn my lines. This shows me, like, if let's say if I was looking to take a price, a buy price here, then I've drawn in my resistance line. So again, zooming out will you can determine a lot better the support and resistance zone. So let's say if we were here taking up entry price, well, price would go up to this resistance area, okay, and then we take another entry here, and you can see price would go up to this resistance area, and from here you can see we are also at another resistance or close to it. Let me just draw it in. Okay, so I just drew in another horizontal line, and no, probably about there. Okay, if you can take a look to the left. Okay, so price could still from here come up a lot further. Again, from here could come up to at least here, and then if it breaks through here, eventually could go up to here. So this is what I mean by zooming out, guys, taking a look at the big picture, taking a look at more candles to the left. So this is another way of understanding the big picture. Okay, and I'm going to zoom right back to the way I trade. These are the charts, and that's so when it comes to trading, I keep the charts at this zoom level, but when I'm zooming out, I'm really looking for some other price action clues as to where a price is going. So again, zooming out, let's just take a look. So you can obviously see reversals right here, okay? And you can even draw in a line here. Okay, so price reverses from here. Prices bottom out, is now on its way up and then starting to make higher highs, and we're in an uptrend, so prices above the green line. Okay, here price was below the red line, so we were only looking for sell trades in this area. Here we're looking for buy trades. Okay, so that's what I mean by zooming in or out and also looking at the big picture. Okay, I'm almost at the end of this video, guys. Hopefully you enjoyed it. Hopefully you learned something and understand how important it is to look at the big picture first before you open up any trade, okay? And often you'll find that perhaps you're taking a reversal trade when you think you're taking another type of trade. So let's say on your daily time frame, or the time frame that you guys are trading, you see price going in one direction, and all of a sudden you switch to a larger time frame and you see that, hey, really you're taking a reversal trade and maybe you should not be taking that trade. Okay, so guys, if you want my free trade signals for the newbies out there, the new subscribers, please send me your email address. I'll put you on my VIP list. I only send out my signals if you give me your email address. There's nothing to buy. There's no credit card, guys. You don't have to worry. I'm not trying to scam you in any way. Giving out the free trade signals now for quite a long time. So you send your email right here to mine. Mine is mskyj007@gmail.com. Again, it's mskyj007@gmail.com. Okay, that's my email. And when you send me the email, guys, give me your first name and let me know what country or what part of the world you're from. Okay, so this is it. Cheers from Canada, guys. This is me right here. My name is Martin. Don't forget to subscribe if you're new to this channel. And everybody, if you found the contents of this video useful and you think it could help you, then please click on the like button. It tells me I'm doing a good job and tells me I can continue with the next week's video. So click on the like, okay? Take care, guys, and we'll see you next week, next video. Bye for now.